Hi, I'm Mark King, Investment Editor at Columbia Threadneedle Investments, and here's what's in my weekly column. Well, we're 2 weeks on from the Bank of England raising interest rates, and if the bank's Monetary Policy Committee was hoping that the 0.25% increase in the base rate would help bolster the value of the pound, its members must be at least a little disappointed at how matters are panning out. The rise in the base rate came on the back of rising inflation. Now, in an ideal world, a rise in interest rates would lead to an increase in the value of the pound, as capital flows into the country attracted by the prospect of higher returns. Consequently, a stronger currency would reduce the cost of imports and eventually help reduce inflation. At least that's the theory. But unfortunately, it's not quite enough to offset the impact of the economic and political uncertainty that's affecting the UK at the moment. And inflation, as we saw from the latest Office for National Statistics data released this week, remains stubbornly at 3%. Political challenges to the Prime Minister led to a fresh fall in the value of sterling on Monday morning. And in early trading, the currency dipped by more than a cent to less than $1.31, according to Bloomberg data. Now, the market's major concern at present appears to be that political infighting in Britain increases the risk that we'll not extract ourselves from the European Union with a constructive deal. Indeed, a report published by the International Monetary Fund this week has found that the UK's failure to strike a proper trade deal with the EU by the March 2019 deadline will likely have a serious negative effect for both sides. Chancellor Philip Hammond will give his budget speech in the UK next week, and recent forecasts from bodies such as the Office for Budget Responsibility and the Institute for Fiscal Studies suggest that poor productivity growth in the UK, not to mention subpar GDP increases, are likely to limit the Chancellor's ability to boost spending or cut taxes. Plans currently under consideration include higher fuel duty on diesel cars, as well as extra levies on diesels in areas where air quality levels are particularly low. Now, officials are also reported to be looking at a reduction in the VAT threshold levels for small businesses and the self-employed. And finally, while giveaways are likely to be few and far between, given the expected state of those public finances, the Chancellor is thought to be looking at offering a new stamp duty cut to first-time buyers in an attempt to address the falling rate of home ownership among young people. Of course, I'll report on the major budget announcements next week.